Good morning, ladies and gentlemen. We got a jam-packed day today. We got plenty of tickers, unlike last week, so you guys came through for me, giving me a nice long list for this Friday. And we're going to recap what we covered in the last video. Link down in the description below if you guys missed that one where we tale of two lies for the market, which one was lying, and I think we got a pretty clear answer today of which one was lying. Now, I did tell you guys to watch the PUBM, the VIX, and basically see how they interacted with the S&P and the NASDAQ, and it's going to be a crucial piece of our analysis tomorrow on the Weekend Deep Dive, where we're basically going to dive into what the IBM was doing and carry. So quick 2-minute recap of this. IBM made a new lower low and closed below the previous day's low. That is pretty concerning. But what is interesting is that the S&P 500 and the NASDAQ both had monstrous days. S&P up 0.36%, NASDAQ up 1.18%, and they were down coming into the day. If we look at the S&P real quick, we can see that we gapped down and filled the gap, kept going, broke the high, but we did not get over the previous day's high. The NASDAQ had a full bullish engulfing candle, engulfing the entire range of the previous day. But does this mean we're going to reverse? Does it mean that we're going to have a bullish Friday? And I did warn you guys that I didn't think this sell-off was very well or good in a sense of like true bearish sell-off because the volume was atrocious. If price is not being confirmed by volume, then it's just a fake out. So we said that yesterday. As you can see here, the volume today was also abysmal. So I still believe one of these indexes is lying, and I just don't know which one, to be honest with you. The IWM is showing signs of basically weakness here, but it could be an extended bull flag pattern here. However, we need to rip today, like now, like yesterday, like come on. We need a nice green day on the IWM, the Russell, and really we need participation from the regional banks. And guys, I said the regional banks could drag this market down lower. We have officially closed below the 50-day moving average. And what do you guys know when I cover things on this channel? You're below all these moving averages. Your last one was here. This is a big fat zero. Do not buy. Get out. Warning. And carry is screaming a warning. The Russell is showing signs of weakness, and the VIX today was absolutely getting destroyed, but not so crazy. Traditionally, VIX is down significantly more. It actually sold off what it gained basically from the night and closed above this trend line. Now it's holding this trend line pretty close. So again, we have to be cautious with that. This trend line does not break. So VIX goes sideways today. I would not be surprised. I would love to see IWM and the carry recover. But again, KRE is going to be the number one thing I'm going to be looking today, because if we start coming down, we're filling this gap here, and if we keep breaking this relative low right here, because this could be higher low, higher low, higher low, and basically we could head higher from here. That's not out of the question. If this was an A to B pattern on the way up for KRE, then you're looking about the $50 mark for that. And that would be a significant bull run in the market. It would be supported by the financial sector, but the financial sector, especially regional banks, are just looking like mugh. So be careful whenever buying this rally. Right now, I would sit on my hands, and out of all the times I've advised to sell on your hands, this is probably the most confusing time just because of the divergence between all the indexes, what Powell is saying, what the market's doing. It's just absolutely crazy. And the thing is, I would basically look, if you want to hold through the weekend, my recommendation, or what I'd be doing if I was in your position, again, not financial advice, is I would look if KRE closes above the 50-day moving average, which right now is at $40.54. You close above it, then great. This is a bull run up, possibly low risk. If VIX breaks the trend line, okay, then we're breaking the trend line. MACD divergence is not necessarily intact, and then we can head down to these sub levels of like the 11s and 10s. But until we get there, then we need to see how it's going. And again, selling options in this market is pretty abysmal because the volatility is gone. It's like non-existent. So if you're a buyer of options, this is the type of market that you basically want, and 0DTE is pretty popular. But without further ado, guys, I'm going to dive into the first requested ticker, MARA. So looking at Marathon Digital Holdings, we can clearly see that it basically had a very long consolidation here around the moving averages, kind of in the kangaroo, and we basically broke that range to the upside. So you definitely have more upside. One of the concerns that I have is that we had a pretty large ranging doji and they're selling wicks on the day. So you do have bigger red volume here than you have green volume. So maybe you're reaching a point of resistance, which could be this previous area where you struggle to get back above the 200 weekly. And if you look at the company from a very long perspective, its all-time high is $84. Now you're down 11. That's nearly a 90% loss on the stock from there. Now it could recover over time, but then again, why do you really want to buy something that is below the 200 weekly that's necessarily bearish? So again, I've shown multiple examples on the channel that you want to buy this company once it gets back above the 200 weekly moving average and holds it, get the retest, which always it has a retest once it breaks that moving average more times than not, and then you can ride it up. Now here, I would like to see a continuation from here. This doji could signify a basic 50% move of this move where you could get in right now to get the retest of the 200 weekly and then see how it plays out. But you really need to have a tight stop loss on this because it could be a riskier play where it basically just collapses down below the moving averages. And if it retraces this move from point where you get stopped out to if you don't get stopped out, it's a 20% loss. So make sure you position size accordingly. But I do see the potential for this to be bullish. You could have a big volume flush and now you're actually getting more and more volume in the company. And it is, in my opinion, a rising wedge where you're basically topping out or almost like a double topping wedge here. So we got to see which way this breaks. Usually these break to the downside. So we just have to be careful on that. And again, it is a riskier play in my opinion, especially with the big volume ramp in it. I want to see more price action as it goes. And I really would rather buy the 200 weekly retest because that's an easy trading strategy for me where you're looking at, okay, break above 200. If it breaks below it, I get out. It's a very simple strategy. It makes the trade very simple. And basically, even if you're a long-term investor, you want to be above that weekly 200 just because we've shown companies spend a decade below and this company doesn't pay a dividend. So you're not really getting anything for holding it. You're looking at a growth company for this. Next, we're going to go into KEY. So looking at Key Corp, which is a financial stock, it's tied to the regional banks. One of you guys, actually, that Tony, I think, believes opened a position around the low. So I'm really curious what price you got in, Tony. If you're watching this video, throw it down in the comments section below. But right now, you're in a support zone for KEY around the $9.54 area right here, or $9.42. This is a price action zone from this latest push. But again, carry showing some of those bearish signs. So I'd be cautious about seeing this support hold. I'd be more looking around the $8.77 as an area to hold. But if you start breaking below the $8.60 mark, then I definitely be thinking you're going to come back, retest, and break these lows here, which could form a nasty A to B pattern on the way down, which could be A to B, B to C, completing down to the $6.73 mark. We just have to be cautious about that. If we look at the weekly, we do see that the weekly is starting to get some rolling action on it as you're heading lower, and RSI is very weak at this point. You haven't gotten the reversal on the smart money flow, but you really haven't got much of a bullish flow or a bearish flow. You twisted from bearish to bullish, but now you're starting to head back down into that neutral selling. So you could get an expansion from here, especially this being more of a dead cat bounce versus a necessarily retracement of the move down. We have to keep an eye on that. Now we do have a buy signal on the daily. So again, you're in a price action zone. You could easily bounce from here. But then again, I just be cautious about this area because carry as a whole sector is showing very weakness in it. Now, the first resistance I'm going to say is the $10.98 and the secondary resistance of $12.14 for the stock. Like I said, if you get a big running carry, definitely key will follow. So we just have to be cautious about that. So remember, on the daily, you're in a zone. The 4 hour is a buy signal. So a short-term play on it definitely could be something that you could do. I would just be a little cautious in this area, seeing how the regional banks are reacting. So just be cautious, play cautious. And if you want to accumulate more as it goes down to these lower price action zones, that $9.43 or even the $8.79 could be an interesting area as an opportunity to buy in more to dollar cost average down. But again, make sure you have proper risk management. Their earnings are coming up on July 20th. So again, very 2-3 weeks from now. So just be cautious about how you play it and basically your stop loss and risk mitigation. So looking at Qualcomm, you basically have a nice big sell-off that you just recently came off of, and MACD is separated from one another pretty far, so I do see this continuing further. The stock has shown 3 days of weakness. You do have a doji candle on the daily, which could signify 50% of the move. So if we assume this is 50% of the move, what about a 7.28% drop? Then roughly the same drop to the downside would bring you down into this price action zone here that you previously had, and really this price zone that you have created off this big volume push up, which would be post earnings recently, especially with the Nvidia and the AVGO run. It definitely could get supported by that, but now it's starting to show that weakness. Maybe it's the buy the rumor, sell the news type event, and really you have this big gap here that was created from the Nvidia volume. So if you come back and retest that 111 area, you definitely need to get a bounce there, or you're going to be heading lower, and it is a double gap. So you got a gap here and you got a gap here that are basically super easy price action zones to fall through. So again, I wouldn't necessarily be buying the company right now. I'd be waiting for further weakness in it. Ever since it's gone sideways, it had a lot of selling pressure on the smart money indicator. That tells me that any pressure to the upside is getting sold off, as you see here where it pushed up. Smart money basically stopped selling, but they were selling into that pressure, but they continued to stay sell side. You did have a reversal signal near the top here, and you nearly came to a price action zone on the top. So let's say very closely to that $126 mark and sold off. If we jump over to the weekly, we can clearly see we have a massive bearish engulfing week. You had a morning star pattern, hit the weekly zone, and are heading lower. So definitely could see weakness here. You do still don't have a reversal signal, but you have an early warning sign here, especially with this pattern. It is showing weakness up here. Now the question is this a pullback, or is this basically going to manifest itself into a larger sell-off? Based on the MACD separation, I do think there's more selling pressure, but then again, the company could go sideways for an extended period of time to consolidate these indicators and then find buyers, head higher. That's definitely an option. If you get the higher option, probably this 126 zone gets invalidated and you could easily push up into the 135, 134 area is where I see an area where I'd be taking profits, and a crazy runner probably up to the 140s, but I wouldn't necessarily try to get all the way up there. We have to see volume confirm this move, and right now you pretty much have lackluster volume on the buying day, and you could have a nice selling volume here and continuation of it if volume decides to ramp again, and basically signifying, hey, second leg down. That's where I'd be looking. Next, we're going to look at PUBM. So as we can see here on PUBM, which is a Pneumatic Inc., it has had an absolute monstrous run, and right now, would I be buying this company? No, just because of this massive run. I would look at least for the 50% retracement, which would bring you down to the $15.71 area. We do have a lot of buying pressure on the smart money indicator, but again, it's showing basically weakness here. You have that buying impulse here that's now slowly fading. So if this basically fades downwards into basically selling pressure, then I would definitely be looking for more downside potential. However, MACD did try to converge and diverge here, and it could get another go very soon in the coming days to cross back over to head higher. Now, if you were to head higher, I'd be looking probably in this $21 range as a price target, but really with the massive move that's had up here that really hasn't had any pullbacks, I'd definitely be looking for at least a decent sized pullback, at least maybe to the 30% retracement, if not the 50. 31% retracement would, or 38% retracement would be the $16.72 mark. So a lot more room that it can go. And similarly to the last stock that we covered, you do have selling candles with a doji indicating possibly 50% of the move, which could bring you back to this area that you basically consolidated in around that $16 or $17 mark. That's if where I'd be looking to get in if I was playing the riskier buying side, but the 50% retracement would be more to my liking to buy. And then if we look at the weekly, we can clearly see that you're in a selling zone. You have support down here. I do think this move is pretty overblown, but you do have a W on the weekly here. So if it manages to hold the previous week's low, then I basically say, okay, it has potential to go up. If you continue selling off into Friday and break the low of 2 weeks look back, then I'd be looking for more downside potential and going back to that $16 area or $15 area for support. But then again, this company has had a pretty massive sell-off since its inception, so it would not surprise me to get another sell-off here. I wouldn't be looking at necessarily a long-term investment in the company. I think it's a little overblown blow-off top rally, but that's just my opinion. Next, we're going to go into HIBB. So taking a look at HIBB or HIBB Inc., it's pretty bearish overall, guys. There's not really any bullishness to the company. You have basically a classic bear flag pattern forming here, and the low, if we assume this is basically a bear flag pattern from A to B, B to C, you're looking at probably $11.27 as the low. So I wouldn't necessarily be buying this company under any way, shape, or form. And I wouldn't necessarily be shorting it after a massive move like this, just because any short squeeze that's ignited, it definitely could catch a lot of people off guard. But the smart money indicator is saying a lot of selling pressure on this. Wouldn't necessarily be getting in until a volume low is established. Now, you did have some volume ramping here. You're dying down, so it could get another leg. Usually these things come in 2 legs. But other than that, I would stay away from this company and not trade it at all. Next, we're going to go into CLF. So looking at Cleveland Cliffs or CLF, you do pretty much have a 50-50% run here between support and resistance. From this point to where I would see resistance, you're looking at 14% and then selling off about 13%. So 1-to-1 to risk to reward ratio. You are in a trending up trend right now. You did break the uptrend that you basically had, which just formed with this pretty sharp move. But I do think this is more of a pullback versus a necessarily beginning of a sell-off. Volume is dying down as it was going up, and really you haven't had a big selling off move that had pretty high volume. So we definitely could find support in this area. If we jump over to weekly real quick, you do have the potential to roll over on the weekly, but then again, it's an inside weekly candle, so we have to see how it closes to see if we have a pretty big flush tomorrow. The daily candle actually looks pretty bullish with a hammer style candle on the day. So if this is an A to B pattern on the way up, we definitely have potential for more upside, which would bring the stock up to $19.32. So, but again, we do have this price action zone here that I basically be looking at the get out of dodge or take profit standpoint, but it's not actually a bad place to buy in my opinion, but I would definitely be looking to make sure it didn't make it lower low or come back below this $15.50 mark. The MACD is crossed bearish. Smart money is starting to buy in this area, so definitely could be seeing a reversal here, but we really have to see how it plays out just because it is in that very sensitive area where the RSI is at 50. Smart money is turned bearish, but the impulse is bullish. So again, we have to be cautious about this area and definitely have more potential. If I was looking at a 50% retracement buying opportunity of this move, 50% retracement comes at $15.42. So if you get another slide down and another wicking candle to the upside, that would confirm the bullishness for me. And really 2 wicking candles to the downside, the bulls defending, I definitely could see the volume ramping back up to the upside where everyone trying to pile in. But I just would warrant to be cautious, to look for the downside potential just to make sure we don't just get blindsided in the trade. Next, we're going to go to FFF. So looking at Future Fuel Corp or FF, you can clearly see that we're starting to fill this gap right here. So even though we have a buy signal here, I wouldn't necessarily trust it just because MACD separated, smart money curling back to the bearish side and our size below 50. So once we fill this gap, I'd be looking for maybe a buying opportunity around the $7.82 mark. But because you're coming down through this gap, I really be looking at that $7.33 area as my first inclination for a really good buy. Maybe opening up a position around that $8 point, but having a tight stop loss if we basically break the lows of these previous candles at around $7.90. That's how I would play maybe the toe dipping scenario, but you had a pretty strong sell-off on bearish volume, and it's just simpler to wait for the MACD to start crossing bullish again, and the smart money to show a reversal sign here. On the weekly, we can clearly see we're heading towards a MACD cross. Along with, we got the reversal signal on the week. So for me, I do see continuation of selling in the stock. Even if we get a short-term bounce on the way down, I definitely be looking at that $7.30 as my first buying point. And secondly, I'd be looking at $7 flat as a really good buying point if you wanted to buy the stock. But again, it's basically gone sideways for an extended period of time after having its initial big spike here. So definitely a price action that constitutes in this area, and we definitely could see more bullishness in the future. But right now we're filling this gap from the previous earnings, and because we're filling that earnings gap, definitely have more potential to the downside versus the upside. So last but not least, we're going to go into LZB. So looking at Lazy Boy, they just had earnings recently, and it was a pretty interesting earnings. So you had flushed on earnings with volume, bought it back up, and basically are having a doji candle now. You did have a selling impulse on the smart money, and you see it actually growing. So a lot of smart money is selling into this rally. So that's why I would be cautious against the bullishness, just because this rampant dip down by the dip mentality can cause you a pain trade to occur. And right now the MACD is separated from one another extremely. I want to see more consolidation in that, and I want to see this indicator basically calm down and basically curl back up, maybe stop the impulse and then look at a buying opportunity. So until this impulse basically goes away, which is the soft red line right here, and we start seeing a relaxation of the selling pressure, I wouldn't be necessarily going bullish on this company. You did have a big consolidation here, and you can really still consider yourself in this consolidation or downwards consolidation. So until it breaks the range with conviction, where you get 2 or 3 candles, I'd definitely be looking for more downside potential versus upside potential. The weekly is showing that it has the potential to go up, and it has a hammer style candle, but it's still closing in the body of the previous week. So I would wait for one more week just to see what it plays out, especially going into the quarterly close, monthly close next week. We do have a lot of money at stake with options, and the monthly close will pretty much give us a very interesting picture, kind of defining where we're going to be. And really, it's going to be a sideways close unless this stock has a pretty massive move into next week, and then you can easily ride the run up. If you get a basic move to the upside, looking at probably the $30 point for the buyers, and the sellers probably getting out around the $23 mark. But other than that, I basically just wait on my hands for this company just to see what moves it's going to make. But right now, it's kind of looking in that it's trying to feel out who it wants to trap, and I really don't want to take part in that. So if you guys enjoyed this video, throw a like, comment down in the description below, and possibly consider subscribing. We do this every single week, so you can throw your requested tickers down below. Hope you guys have a wonderful day, and I hope to see you in the Weekend Deep Dive tomorrow.